Stop trying to get rich fast. That's exactly why you're still broke. If you want real wealth, follow these 4 simple rules Warren Buffett used to build billions. Invest in yourself, think long-term, control your emotions, and live below your means. The difference between the rich and the rest isn't luck, it's discipline repeated for decades. If you want to be rich, don't start by chasing money. Start by building value. Money is only a byproduct of value created consistently over time. Wealth is not built in one dramatic moment. It is built in quiet decisions repeated for years. The richest investors in the world do not rely on luck. They rely on patience, discipline, and understanding what they are doing. Becoming wealthy is less about intelligence and more about temperament. You do not have to be a genius. You have to be steady when others are emotional. The first tip to becoming rich is to invest in yourself before you invest in anything else. The best asset you will ever own is your mind. Improve your skills. Read daily. Learn how businesses work. Understand money, accounting, and human psychology. Knowledge compounds just like money. A person who increases their ability to earn will never depend on one opportunity. They create opportunities. Every dollar you spend on learning can return thousands later. When you sharpen your thinking, you make fewer mistakes. And avoiding big mistakes is one of the fastest ways to build wealth. The second tip is to think long-term. Most people lose money because they want quick results. They buy when everyone is excited and sell when everyone is afraid. Wealth is created by holding strong assets for a long time. Time is the friend of a good investment. When you invest in quality businesses and allow them to grow for years, the power of compounding works silently. A small investment can multiply many times over if given enough time. 10 years of patience can beat 1 year of brilliance. The stock market transfers money from the impatient to the patient. If you cannot hold an investment for 10 years, you should not hold it for 10 minutes. The third tip is to control your emotions. Fear and greed destroy more wealth than bad strategy. When prices fall, people panic. When prices rise, people become greedy. Successful investors remain calm in both situations. They buy when others are fearful and are cautious when others are greedy. Emotional discipline protects capital. If you cannot control your reactions, the market will control your money. Wealth is built by rational decisions, not emotional ones. The ability to stay steady while others panic is a financial superpower. The fourth tip is to live below your means. Being rich is not about showing wealth. It is about building it. Many people earn high incomes but stay broke because they increase expenses with every raise. True wealth grows when you spend less than you earn and invest the difference. Avoid unnecessary debt. Credit cards and lifestyle inflation quietly destroy financial freedom. The habit of saving and investing consistently matters more than the size of your income. Even small amounts invested regularly can grow significantly over time. Choose businesses you understand. Never invest in something simply because others are making money from it. If you cannot explain how a company makes money, you should not invest in it. Simplicity beats complexity in investing. Focus on companies with strong fundamentals, honest management, and durable competitive advantages. A great business at a fair price is better than a fair business at a great price. Quality matters. Reputation matters. Trust matters. These are long-term wealth drivers. Risk comes from not knowing what you are doing. Before investing, research thoroughly. Read annual reports. Study balance sheets. Understand cash flow. Investing is not gambling. It is the process of owning pieces of businesses. When you buy a stock, Think like an owner, not a trader. Owners focus on long-term growth. Traders focus on short-term price movement. Wealth favors owners. Protect your capital. The first rule of investing is not to lose money. The second rule is never forget the first rule. While losses are part of investing, unnecessary losses can destroy years of progress. Diversify wisely but do not overcomplicate. Focus on strong opportunities rather than spreading yourself too thin. Avoid chasing trends. Stick to proven principles. Boring strategies often create extraordinary results. Patience is not passive. It is active confidence. It is the decision to trust your research and allow time to work in your favor. Compounding is powerful but invisible at first. In the early years, growth seems slow. But over decades, the curve becomes dramatic. The difference between average and exceptional wealth often lies in consistency over long periods. One disciplined decade can change your entire financial future. Surround yourself with people who challenge and inspire you. Your circle influences your thinking. Associate with people who are better than you in character and skill. Over time, you will move in their direction. Success leaves clues. Study those who have built lasting wealth. Learn from their habits, not just their results. Avoid envy. Someone will always be earning more or growing faster. Comparison leads to risky decisions. Focus on your own strategy. Build at your own pace. Sustainable wealth is a marathon, not a sprint. Do not risk what you have and need for what you do not have and do not need. Protect your foundation. Understand that reputation takes years to build and seconds to lose. In business and investing, integrity is everything. Work with trustworthy people. Be trustworthy yourself. A strong reputation opens doors that money alone cannot. Long-term success is built on trust and reliability. Do not fear market downturns. They create opportunity. When strong companies become undervalued due to temporary fear, long-term investors benefit. Volatility is not risk if you know what you own. It is simply price movement. True risk is permanent loss of capital caused by poor decisions or lack of understanding. The habit of reading cannot be overstated. Many successful investors spend hours daily reading reports, books, and industry news. Continuous learning sharpens judgment. Knowledge gives you confidence during uncertainty. When you know why you invested, you are less likely to panic. Start early. Time magnifies small differences. Investing $100 a month at a reasonable return can grow into a significant amount over decades. Starting 10 years earlier can double or triple your final result. Time is more powerful than timing. You cannot control markets, but you can control how long you stay invested. Understand the power of simplicity. Complicated strategies often hide confusion. Clear thinking leads to better decisions. Focus on fundamentals. Revenue growth, profit margins, competitive advantage, management quality, and long-term demand. Ignore noise. News headlines are designed to create emotion, not wealth. Cash is not trash. Having liquidity allows you to seize opportunities when others cannot. Keep reserves for emergencies and market downturns. Financial security provides psychological stability. Stability supports better decisions. Be decisive but not impulsive. When a great opportunity appears and you have done your research, act with conviction. Rare opportunities require courage, but courage must be based on preparation, not hope. Hope is not a strategy. Discipline is. Wealth is built by habits, not events. Daily discipline, thoughtful decisions, consistent saving, long-term investing, emotional control, continuous learning, and ethical behavior form the foundation. Anyone seeking riches without these principles will struggle. Anyone practicing these principles consistently will eventually see results. True richness is not just financial. It is freedom. The freedom to choose how you spend your time. The freedom to say no to what does not align with your values. Money is a tool. Use it wisely. Build it patiently. Protect it carefully. Grow it steadily. And remember that the greatest investment you will ever make is in your own ability to think clearly and act rationally when others cannot.